until you jump into the business, you may not learn a lot of that. So my suggestion is always partner with somebody who is very experienced in
Hmm.
first one or two deals,
Yeah.
and then be the front runner guy to do everything. Right? Don't think that, oh, this is not my role, this is not my role, like that.
Are you looking to achieve massive success in your life without dealing with costly investment nightmares? If yes, then this is the podcast for you. Here, we provide engineers and busy professionals all the secrets and strategies to create multiple streams of income, build generational wealth, and live a meaningful life by design. Here's your host, Ted
Hey
Patel.
everyone, this is your host Ted Patel, and welcome to this week's edition of Decoding Cashflow Podcast. I'm here with Sridhar from Grow Wealth to Retire. Sridhar brings decades of experience as an accredited syndicator and passive investor in commercial and residential real estate, with proven track records of co-sponsoring as well as passively investing in numerous multifamily deals. He's here to share actionable insight to help you achieve financial independence through real estate. So Sridhar, welcome to Decoding Cashflow. It's a pleasure having you here.
Oh, thanks for having me. Hello, good evening, good afternoon, good morning, whatever
Uh,
time zone you are in. Yeah.
yeah, it's evening over here in New Jersey.
Yeah.
Yep. So, all right. So Sridhar, before we get started, or maybe dive deep into the niche,
Mhm.
if you can give our listeners a little bit background about yourself, w- before you got started in the real estate, what did you do and how did you move to real estate? What sparked your initial interest in real estate?
Sure. Originally, I was in IT segment, so I've been an IT professional for 30 plus years. Worked in Wall Street firms and then worked in technology firms in Bay Area and worked in the big techs sitting in Dallas. Right now, I'm in Dallas, Texas.
Hmm.
While working through these years, I wanted to become an entrepreneur. So I started couple of endeavors while I was in IT space. I wanted to do some IT companies. Those things did not complete. I mean, I had to abandon the effort in the middle due to partners dropping off of the effort. And I said, okay, I
Hmm.
need to pick something that I can execute on my own if the partners leave me in the midway through. So last couple of times it was like in the middle of the effort, right? The commitments have changed. So people got busy and they said, oh, now I need to,
Focus on
they need to
something
focus
else.
on
Yeah.
their other stuff and they left it. So that is when I thought that, okay, let me start with something that I can start doing as an entrepreneur. While I was looking into all this, then initial thought is like, I have to be financially free. So I have to do something that make me passive income so that I
Hmm.
can focus on restarting my IT enterprise and all that. So that being said, initially I was looking to acquire single families. So that time, when I'm talking about like 7, 8 years back, when I was looking for single families, market was so hot.
Hmm.
Whatever LOI I put, people were beating up left and right. I didn't want to go into that bargaining mode or
Hmm.
like a competition mode, not bargaining, it's the competition mode, and then pay excessive pricing for a single family. Then I thought there should be a way out
Hmm.
so that I can do something on my own. So typically people were looking for other small projects. Then I thought I should go for
Hmm.
bigger and bolder so that there won't be that much of competition. So that then I started looking into hotels, motels, and other retail spaces, etc.
Hmm.
While doing that, in one of the events, I bumped into multifamily mentors presentation. So I liked it, and then I started investing passively immediately after that call. That day, I invested a couple of deals.
Hmm.
And while I was exploring whether it's a good idea to go full time or not, so Parallelly, I was looking into note investing, etc., etc. So the first investments whatever I made, they started sending me the money, like passive income. So
Mhm.
that excited me a little bit, and then I said, okay, if I'm getting passively this much, then I should go into active so that I can make even more.
More.
So
Okay.
that is what is the first step, and then I can speed up my financial freedom. That was another reason by going active. It will do it. And also, I don't want to be in the same tech sector for a plan B also. Even if I start
Mhm.
as an entrepreneur in IT space, then it could face the same situation, right? If the IT segment is slow, then I may
Mhm.
be facing the same problem both at work and at personal level. So I thought, let me branch out to the other area, real
Mhm.
estate, and build the portfolio there. So that's how the saga started. So since
Yeah.
then, I invested close to 50 deals,
Mhm.
50 plus deals passively. And then actively, I completed 18 transactions. Some of them are like part transaction, then one big transaction. So I can say 15
Mhm.
deals, even though those
Yeah.
are 18 transactions. Um, in these 15 deals, three went full cycle. So we were able to meet the ARR projections in all those three, or exceed the ARR projections, I would say.
Mhm.
Uh, and we were planning to exit some more, but the market turned against us. So we are holding off and hoping that we will be able to exit it.
Yeah. Soon after the cap rate comes down.
Yes, yes,
Yeah. Or interest, both of them, right? Interest rate as well.
yes, the cap
So
rate and interest.
yeah. So when did you start your multifamily, like when journey?
2018, I would say.
18?
Yeah.
And when did you start actively participating in it?
2019 towards the end.
Okay, pretty soon. Once you learn
Yeah,
the
yeah.
basics,
Uh,
after investing few deals as a passive investor, you learn the basics, and then you just jumped into active side of
yeah.
the. Okay, so mhm. Any other assets you invest on right now in addition to multifamilies?
Like everyone else, stocks, bonds, and all that.
Hmm.
Um, Slowly started exploring into businesses now, but I have not
Okay.
invested. I have invested in one business, but it didn't go well. So
Hmm.
it's like it was like franchise, like what you call this exercise
Okay.
companies, right? So they have a
Hmm.
franchise. So I invested in it. COVID hit, and they lost big time. So
Yeah, that was.
that was unwanted. Until then, it was doing really good. So
Mm.
COVID kind of destroyed that business.
And do you still have your IT firm or your full-time real estate now?
No, now last year I switched to full-time real estate.
Hmm.
With that IT background, still I wanted to maintain, and also once somebody is into IT, right, they cannot simply give up that IT.
Yeah, you
Might as
always
well eat.
yeah you
Yeah,
you
I would
always
say.
have some touch of it, right?
Yeah,
That's
so
yeah.
so now I started the IT company again. So,
Okay.
but to do like take the projects and execute the projects like that.
Oh,
So,
that's great. So now tell us something about the first deal, right? First multifamily deal as an active investor. How
Mhm.
did you get that deal, and how did you execute that deal? Right. Yeah.
So when I was attending all these events, right, the very first event we that motivated me towards multifamily. In the same event, another gentleman was sat next to me, and then he said, "Okay, let's go and do it together."
Okay.
Typically after the event, you get excited and to do something, right? So we
Mm.
did not leave it there. So we, in fact, worked on it. And whatever we thought that, okay, let us do. He was doing like smaller units until then, like 20, 30 unit type of multifamilies. I told
Mhm.
him that if we are doing together, we should go for big. So
Mhm.
that was first one for me. For him, it is like sixth or seventh deal. So myself and another friend of mine and him, the other gentleman, three of us went for this 96 unit deal.
Okay.
in a suburb to Dallas. So it's a 2 hours drive from Dallas. We bought it. It was a heavy lift. So
Mm-hmm.
we were able to bring the units online. So there were 36 plus units were down when we bought it. So we had
Mm-hmm.
to make all the units up and running. Literally redid the 36 units. So that was a very good experience. A lot of mistakes, rookie mistakes.
Yeah,
Yeah.
it's only the first one, right? You got to get to learn a lot of thing in the first deal.
Yeah.
Yeah. And how much
And
was the raise for that deal?
hmm?
How much was the raise for that deal?
It was $1.2 million. So we thought each of us could do 400, 400, 400.
Uh-huh.
My thought was like if I cannot raise it, maybe I will put my own money to a major extent and then for whatever else that I could not raise.
Mm-hmm.
But to my surprise, I was one of the highest raiser in that deal. So one gentleman did not do anything. So me and my
Uh-huh.
friend were able to raise literally all the money,
That's very
$1.1
impressive.
million. dollars. Yeah.
Mm-hmm. Wow. Yeah. So now you only invest in Dallas area, or are you invest all over US now?
So I was pursuing all over Sunbelt states.
Okay.
We have one property in Memphis.
Mm-hmm.
While we were going through these phases, right? So in other markets, it was very competitive. We don't want you to pay, too heavy price on that. Luckily, we did not get into those heavy price situations.
Mm-hmm.
Only one in Memphis we bought outside
Okay.
Texas.
Outside the Texas area. And normally when you try to underwrite the deal or maybe source the deal, right? What are the specific things that you look into just to make sure that it's worth putting a LOI on it?
Yeah. So the very first thing I look at is median household income in that area.
Mm-hmm.
And the second thing I look is crime in that area. And third thing is like job growth and companies, number of companies in that area.
Mm-hmm.
And another thing I look for is the population growth. Typically, when the job growth is there, population growth will be there too.
Yeah.
So those are the key factors that drive. I make sure that demographic is diverse, is not like same race, but a little diverse.
Mm-hmm.
Um, and another thing I look for is properties closer to a freeway.
Okay.
Usually, I don't go into interior properties. I always try to be within 1 or 2 miles away from the major freeway.
Mm-hmm. Well, it's easier for the tenants to
Yeah,
commute.
yeah. Renters typical approach is like they take the apartment and then they want to have the mobility if they need to change the job, right?
Yeah.
Should be closer to the freeway so that it will not burden them on the time
Mm-hmm.
when they
Yeah.
switch the jobs, right? It's easy to get onto freeway to go to any area in the city.
Mhm. And what about in the numbers? Like what different numbers or
The
to
units wise,
cross check, validate? Yeah.
yeah, units wise, minimum 100 units we look for.
Mm-hmm.
Maximum, I stop at 400. Once we cross 400, typically it is the institutional buy. No
Mm-hmm.
more syndicators or retail buyers will be there. I mean, there will
Mm-hmm.
be there, but very few of them will be
Yeah.
there. So we prefer to be that way. And another thing we look for is 1990s built or later. So until last year, we used to check for 1980s, but now we are focusing more on 90s and later.
Mm-hmm. Not too heavy lift, right? Only Class A or Class B properties.
Mostly Class B.
Okay.
Class A, we've decided to build rather than buy existing one because
Mm-hmm.
that's where we can get some additional advantage.
Yeah, that's true. So that's what we have been focused on also, as I mentioned
Yeah,
earlier, right? It's I would say normal. It's like a heavy value add, full value add, you can say,
yep, yep,
right? New construction. So yeah, it does give a little bit more margin
yep,
uh, um, than buying the existing properties.
yep.
All
Agreed.
right. And like any specific strategies or systems you have in place um, to make sure the underwriting of those properties are done as expected?
Yes, I do have a virtual assistance team. So every night they download deals that qualify the criteria which I mentioned, and
Uh-huh.
then they underwrite. And we have additional guidelines for underwriting, and they make sure that the deal falls into all those criterias and selection.
Hmm.
And then um, if we see the returns that are acceptable, then only I would put an LOI.
Hmm.
So
So the first,
typically. Hmm?
Mhm. So your VAs will take a first crack at it, just
Yeah,
try to put all the numbers into, the software or spreadsheet, whatever you might be using,
yeah, yeah,
making sure if the numbers tie up, then they'll pass it on to you,
yeah.
right? And do you get these deals directly from the broker or off market?
We will say
How does it
around
work?
30 to 40% off market and 60% from websites and on
Hmm.
market.
And these off market deals, do you do direct marketing, anything as such, or it's just a word of mouth?
Off market is mostly the brokers before they list, right? They
Okay,
will
all right.
send us say that, hey, do you have any interest in this one? Roughly, it may market for this price.
Mm-hmm.
So if you come closer to this one, then we don't even need to list. That's what they will
Uh-huh.
say.
Okay, all right. And with regards to raising capital, right, for these deals,
Mm-hmm.
what's your strategy or the process, I would say, to raise capital for these deals, to syndicate these deals?
So originally, I started with my own close friends, and
Mm-hmm.
slowly I started attending multiple real estate events, met a lot of people,
Mm-hmm.
and slowly explained them what my approach is on and all that. So that's how I built the investor base. It
Okay.
took a while, but I was able to build it. Last year has been brutal, so now some of them will have some second thoughts to come back into multifamily. But my opinion is multifamily is going to stay here. It's like people need
Yeah.
housing. Right? The segment is not that great last year, so slowly
Yeah.
it's going to bounce back this year.
Yeah. No, absolutely right. Like after this COVID and after the interest rate hike, right?
Yep,
The price, what we have seen also is the price have dropped at least like 20% across the board. Some places less, some places more, but on an average 20%. And the people who didn't had enough liquidity,
yep,
they got burned.
yep.
Yeah. Mhm. So I hope you didn't come across any capital calls or anything here on
No,
your
we have
things.
not done any capital calls on any existing properties. We do have
Mhm.
one or two stressed properties like shortage of cash, so we put our own money as a partners.
Okay.
We felt that that is the best way to deal with it.
Hmm.
Luckily, it's not a very, very big checks on most of these deals, right? So we were
Yeah,
able to manage that way.
that's great. And how do you see the real estate landscape developing like in the near future, like within 1 or 2 years? Where do you see the growth? Which segment
So
and yeah.
my guess is from the third quarter onwards,
Hmm.
there will be more demand than supply.
Okay.
There are so many initiatives now the new government is talking about. For example, they're opening up the drilling options,
Mm,
right?
yes. Uh-huh.
Yesterday they did an executive order. So he's
Yeah.
saying drill, baby, drill. So that would improve the market situation in Houston and Dallas because there will be
Hmm.
a lot of companies that are oil and gas dependent in Houston and Austin, Dallas. So that should create a lot of employment in near future. Obviously, everybody will wait for the real order from the government to see what they're allowing and what they're not allowing. So that may take a month or two, and they will start hiring people and then start um, bringing the operations back up. So this whole process, I'm thinking it may take 6 months. After that, it should ramp up slowly. The competition will pick up, and then it will be a big job market like oil and gas. Houston in particular, it should
Okay.
really have. Another thing is the data centers, right?
Mm-hmm.
Now they're going after this AI AI platform. So, $500 billion investment. More than likely, they will build few data centers in Texas because Texas has got very big footprint of Fortune 500 companies, right?
Mm-hmm.
In Houston, Austin, and Dallas. Like at least combining these three, close to maybe 90 plus companies have headquarters, Fortune
Yeah.
500 companies. So they prefer to keep a data center closer to them, right? That way they can get more subscriptions and all that. So
Mm-hmm.
that should further boost the job market here. And another aspect is um, in general, right? There are a lot of new young crowd moved to Austin and Dallas, right?
Yeah.
Any startups that want to do into AML segment, right?
Yeah.
They prefer to start here.
Yeah. A
So,
lot of population growth in that area
yeah, yeah.
after
So,
COVID, yeah, especially.
so that also should help. So, and due to COVID, there were not that many new building permits in multifamily or even single family. So that also helps in improving the demand in this area. So
Mm-hmm.
overall, I'm expecting the market should start rallying up from third quarter onwards. And hopefully, if the Fed cuts the rate before year end, I mean, before the third quarter, right? That
Yeah.
will help. If there is a in a projection that there would be a rate cut, couple of rate cuts this year. So, right. So that should also boost the economy.
Mm-hmm.
Overall, I'm positive compared to 2024. 2025 market should be
Better. Yeah.
better.
Yeah. That's the expectation also, right? Let's
Yeah.
see. Uh, yeah. If the main thing is, the Fed, they have been cutting the rates, right,
Yeah.
for their but 10-year treasury isn't coming down yet. Like, of course, the mortgage depends on this
Yeah.
treasury, right? So we haven't seen that coming down, regardless of Fed cutting the interest rate.
Yep.
Uh, let's see how it goes, how it plays out. If we can see some changes, downward pressure on the mortgage, that'll be great.
Yep. Yep.
All right. So during your real estate career, right? As you mentioned, you have done these many deals. I'm pretty much sure that you might have encountered one tough situation, right? Where uh, any kind of,
Yep.
asset management or, uh, or raising money, any such situation that you can describe, any one thing or one scenario which was difficult or challenging.
Yeah, I pretty much faced like multiple situations
Yeah, of
at
course.
once.
Yeah.
Over these 18 deals, in one case, for example, in the beginning, right? I had all the soft commits and I thought that people would send the money. So I waited till like 10 days before the close and started touching base with them. And to my surprise, a lot of them went on vacations.
Uh-huh.
So
Okay.
everybody said, "Oh, okay, I'm I'm on vacation now." So nowadays, at least we have WhatsApp, so that they would attend the call, right? So unfortunately, I cannot do it now until I come back, which is like a 1 month time or 2 months time.
Oh,
So
wow.
literally, I was short by 700K, like that. For the close, whatever I promised for the deal.
Uh-huh.
I was short by 700K. So I had only 7 days to fill in. I was so stressed out that one in the fundraise. So literally I called all the friends who were never in the retail, I mean, real estate investors who were never real estate investors. And literally I kind of sat with them and make them understand my situation. They were not fully sold on the deal, but because they know me, so they
Uh-huh.
invested, and I was able to pull off that one. That was one stressful situation. that I could encounter. And another one is the last close. What happened was originally we started with a new Fannie Mae loan. And while we are going through that initial due diligence period and all, um, the lender said, "Oh, this property has been not doing on keep up." Okay, the lender
Uh-huh.
required repairs. The current lender did not take care of it proper. Current owner did not take care of it properly. So we don't want to give a new loan on the
Oh,
bank.
okay.
So we were about to close in within 3, 4 weeks, and they throw this curveball on
Yeah,
us.
yeah.
Then we had to restart with the assumption. So I went and then what you call tried my best to convince them to give that assumption instead of the new loan. So it took almost 2 to 3 weeks to convince them to give the assumption. So then I almost ran out of time. Then I had to take extra time from the seller.
Mm-hmm.
And then I fixed that problem. The next thing is now since from acquisition to assumption, right? So the assumption loan amount was less because that was the outstanding balance. It was less. So my
Uh-huh.
fundraise amount went up, right? So we
Mm-hmm.
tried within the short span to raise that much of amount, but we were not successful because by then the interest rate started going up. So
Mm-hmm.
everybody were little like cautious to invest into the deal.
Yeah.
So we had to change the approach and put the second lien position as a soft pref. Okay. So we
Mm-hmm.
got the term sheet from the lender, a new lender for soft pref. Fannie is the primary loan. It's a soft pref guy. Just
So
1
the
bit.
assumption was the Fanny was the assumption, right?
Yeah, Fannie was the
Okay.
assumption.
Okay.
And we got a term sheet from a reputed company as a
Mm-hmm.
second soft pref.
Mm-hmm.
And just 1 week before the close, they said that, by the way, we don't want to give a second loan position now. So take the complete loan with us from as a bridge loan at
Oh,
a much
wow.
higher interest rate because the interest rates went up by then.
Went up. Yes.
They cornered me there. Okay.
Aha.
So then I told the seller, say, this is beyond our control. So if I take this loan, the deal is not going to work out. So
Yeah.
we are going to completely be underwater. So I'm still exploring. I may need more time. Then he said, I will give the money. So
Mm-hmm.
the seller financed it, but
Okay.
he forced us to put into some balloon payment structure. So
Okay.
we closed the deal when we are going through that balloon payment structure, paying back all that money. So this is a big challenge. So I thought that I may not, I'm confident, but other partners were like midway through, one by one, started losing confidence. So in that process, I also almost at the verge of losing confidence on the deal. Even the broker said that just walk out, but that was a $500,000 hard money into the deal by then. So I said, no, 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 I cannot lose $500,000 just for the sake
Oh,
of.
that was escrow deposit that he said he
Yeah,
was
because
going to lose?
the original time period is lapsed, right? Because that
Yeah.
original Fannie loan, basically they said they're not going to give it. By then the hard commit date is there, like money became
Well,
hard.
mhm. You didn't had a contingency on loan or
No, we didn't have the contingency on the loan. So because we had the term sheet from Fannie, so we
okay.
never expected that Fannie would take a U-turn just before the close. So the lesson learned. So now
Mhm.
I don't take anything for granted until closes. No, nothing is granted.
Yeah,
So
till everything is signed and dried,
until the money
anything can
comes in,
happen.
no guarantee. Yeah.
Yeah,
So
that's
now
true.
I started putting any plan B, plan C for everything.
That's great.
So
That's
until, I
great.
mean, luckily that time also I was exploring multiple options, but now it's a mandatory practice for me to see what is my plan B, what is my plan C type.
Okay. So let's say if anyone, new investors, okay, they
Hmm.
want to start in the multifamily, similar to how you did, what are
Yep.
your advice to them? Like what's the process they should follow or get started with?
Okay. So first thing is understanding the nitty-gritty of the business is very important. Like
Hmm.
um, until you jump into the business, you may not learn a lot of that. So my suggestion is always partner with somebody who is very experienced in
Hmm.
first one or two deals,
Yeah.
and then be the front runner guy to do everything. Right? Don't think that, oh, this is not my role, this is not my role, like that.
Yeah.
We completely submit, take the stress on you. Yes, first one
Hmm.
or two deals, you will take a lot of stress since you have some senior member. You may be able to guide you on the process, right? That is definitely is a must. And second thing is don't go for heavy lift value adds as a
At
first,
the beginning, right?
as a beginning.
Yeah.
So go for a moderate one, and mostly in a high income areas, it is better when you do these deals, right? Initially with
Yeah.
high income areas, that way some of the challenges you would face in the low income area can be eliminated.
Hmm.
Example, if you go to an area where median household income is 40 or less, literally every month you need to go and knock the doors for the rent payment.
That's true. Yeah.
Whereas if you go to higher income areas, usually they will have auto pay.
Yes.
90% of people may have auto pay. So then you're dealing with only 10% people and call them and get the check or whatever it is. They need the reminders type of thing. You
Hmm.
need to remind them, and you will have a higher um, rate of automation for the rental collection. So less stress,
Hmm.
all that. Even the same thing, crime also, it will be less, etc. You'll have less hassle. So
Hmm.
that's what I would say. If I'm starting now, had I known that, I would not have attempted some of the projects that I have acquired
Hmm.
in the process. Yeah.
And what about raising capital? How would you what would you say for the
Raising
newcomers?
capital. One thing I would say is like don't give like just for the return sake, showing like higher returns to attract people. Don't do that. Be honest, give the
Yeah.
right numbers, and be consistent. Like don't push the investor to come on to the deal. So understand their need, understand their situation, understand their objectives, and accordingly uh, tell them upfront whether it's going to fit their needs or not.
Uh, yeah, because everyone has their different risk appetite, different,
Yep.
period of for investment,
Yep.
right? So yeah, absolutely.
Yep.
All right. All right. Sridhar, loving this conversation, but I also want to be mindful of your time.
Yeah. Sure.
So would like to move to the final round of questions. Are you ready?
Sure. Yep.
All right. Okay. So which is the one book that had the most impact on your life or on your business?
So, like many others, like Rich Dad Poor Dad is the one that,
That's pretty common. Yeah.
yeah, yeah, and that one, that one is a big impact.
Yeah.
The other one is um, Think and Grow Rich.
Mm-hmm.
That one, Napoleon Hill book. That is another
Okay.
one. Yeah,
That's good.
that
Yeah,
is
both
also
of
very
them are
big.
good reads. Yeah.
Yeah, so those two, yeah, those are the main ones
Mm.
that changed my
Yes.
thought process. Yeah.
That's good. Yeah, uh it's one of the must read for, any investors.
Yep.
Even if you're investing in real estate or not, right? It's
Yeah. Any business.
something basic.
Any business. Yeah.
Yeah. Yeah. All right. So, what are your main source of information to learn and grow?
So information wise, mostly the YouTube, and I go and attend multiple events. That is
Hmm.
another one really, really gives very valuable information. Um, in fact, every event I attended, I got benefited out of it. All I needed
Hmm.
was at least one or two connections. That's what happened. So that took me to a different level, like the one which I attended first event, right? That made me jump into active real estate investment. And like that, every event I attended, I got something.
All right. And what is the best business or investment advice you like to give to our listeners?
So businesses go in cycles. It's not always like a single straight line, right?
Yeah.
So one should have that risk
Flexibility.
appetite
Yeah.
to
Yeah.
handle that variation. So
Mhm.
otherwise, it will create a lot of stress for a lot of people. So unless the person is ready for that stress,
Yeah.
think twice. And
All right. And which is the one habit or routine which has been crucial to your success?
so mine is the persistency. Like whatever item I work on, usually I don't give up until I take it to the conclusion. And second thing is time management. So
Mhm.
I slice my time. So I do too many things in a day. That is sometimes like overcommitting situation happening. Like originally when I plan, when things are going smoothly, whatever time commitment and whatever time slicing I'm doing, it goes perfectly well. If
Mhm.
things go wrong on 2 or 3 deals, then the time gets squeezed out.
Yeah.
So that is the challenge I have.
All right. All right. Last question. How can Decoding Cash Flow listeners get in touch with you?
So they can reach out to me through my website www.growwealth2retire.com. Yeah,
Okay. All right, Sridhar. It was a pleasure talking to you today, and we'll surely stay in touch.
yeah. Thank you. Thanks for inviting me onto the podcast and making me connect to your listeners.
Thanks for listening to Decoding Cash Flow, brought to you by Aster Capital. If you found value in this episode, then please share it with someone who you think could benefit from it. And make sure to act on what you've learned. If you want Ted Patel to personally help you reach your goals, then feel free to set up a one-on-one call with him. Also, visit us at astercapital.com for more free resources. Content of this podcast is for informational purposes only. As always, please consult your own advisor before making any investment decisions or setting a course of action. Thanks again for joining us on this episode of Decoding Cash Flow, and we'll catch you in the next episode.